Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
All right, so now,
the way I always think it is the way you were actually, when you first started, depending on no matter what asset you're trading, because people, I have a friend of mine that would tell me that SPX or SPY has had that downward slope for 20 years, and so he always would say that market makers are predicting that the market's going to fall. I think it's more towards your point.
Yeah.
And the potential slight, or there's a small probability of a huge move to the downside in hedging, more so than the market making a prediction of some price in the future.
Yeah, I agree. I agree. No, the one thing I noticed that was interesting was not general contango had little to no predictiveness, but when we went into backwardation, actually, that's when we actually saw. That was when I noticed that there was some actual, might be some sort of movement. I'd really be interested in seeing how doing some sort of, predictive, what kind of predictive qualities that have.
Yeah, that's a good point, Mark, because I have actually watched when they actually shift their slope. It sort of gives you a crossroads of not a guarantee that it will move one way or another, but hey, the options market is saying that there's a pretty good chance that the market might reverse here, or it might actually fall much further.
Yeah.
Sort of a shift in sentiment.
Yeah. Now, Tina says, don't you want skew to be low to begin with in a trade if you are trading a non-directional? You know what? You want skew to be low in terms of the back month being over the front month. When you're doing a non-directional trade like this, you really want that front month to be, somewhat over that back month. And you're basically making a bet that there was some sort of panicky buying in the front month that you can take advantage. All right? All right. If one has a directional bias, all right, and intermonth skew gets out of whack, what trade might work? All right? So we've got intermonth skew moving around, and we've got some really interesting different things. So the first thing you can do is obviously the directional calendar. So if you think that you're going to be right on something and the front month skew is out of whack, all right? So front month skew is out of whack, and it's caused because the dollar has gained a lot on the Canadian, all right? Or it's caused because, who knows, all right? Then there's going to be some decent opportunity for directional calendars, okay? And we'll just quickly take a look. I was going to show two examples. I think we're running a little long. So I'm going to pull up this CDD and T-log. The good news is I don't have to put in new settings for this time, okay? Now, I'm going to go to BackTrader, and then we'll go to July 15th, 2010. All right, now this was obviously a hectic time for the market, okay? Obviously, here we are. We've got the Canadian dollar, and, it's trading 104, and you've got, actually, I was looking at August, July, all right? And if you look at the Canadian dollar, CDD, let's see what was going on here, all right? Charts. Here is the, wrong one. Here's kind of a 3-month chart of what was going on at this time. What are we seeing? Well, we're seeing kind of that 30-day vol exploding over that 30-day vol exploding over that back month, that back month vol. Now, what can that tell us? Okay, so we go out and we'll see what happens here. You throw on, skew's getting a little bigger, okay? So what are you going to do? Okay, we're trading 104, okay? And we think that this thing is gonna rally into us. What would we do if we're bullish? Obviously, we can throw on a bull spread, okay? And the nice thing we're doing is we're throwing on the bull calendar, all right, when we've got skews that are on top of each other, so it's not going to get worked over. All right? And, the point is, if you watch, look, did you see what happened here? Here we are. We've got this non-directional calendar. Look at how the months move. And this is interesting. We've got a flat skew. They end up moving together in this thing. All right? And then, why did I feel like I wrote down the wrong dates? You're watching, look at that front month just absolutely explode over the back month. And you're saying, Mark, it's, a couple of points. And, in a low vol product, going from 13.9 to 13.6, that's a pretty significant move. All right, and, I must have put on I don't remember exactly what I was doing, what my point was here. Well, sorry. But you can see that, we've got this flat skew working here, and, it's just kind of not working. Now, I'm trying to remember exactly what my point was here. All right. Great when term spread widens. All right, we have the 16th, and I'm guessing that the 28th, let's see what's going on the 28th. This happens when I need more sleep. Yeah, so, let's see. That trade actually, the point here, I think, was that trade actually was problematic, and we had a good volatility skew. Let's see what happens if we throw on something, and I'm trying to remember exactly what happens here. Let's see what happens if we throw on something that is, going to blow up. Here we are on the 20th. All right. Let's see what happens here if we throw on something at the money when that skew is widening, and you'll kind of see how this thing can be a problem. So we're going to throw on a 103 spread with a wide skew. And you can see I'm actually short deltas, but I got this wide skew. All right, let's see how this bearish spread does. All right, now take a look. I had negative delta, and I didn't make any money. All right, and that's because this front month is just plummeting relative to the back month. And so I believe the point was that, yeah, I had two losing trades, but the reason why the one did not lose as much as the other, okay, and they were both losers, was because when we got in, it's all coming back to me now, it's like amnesia. When we got in under more favorable circumstances, all right? If you get in under favorable circumstances, and this is going to be another great point that I managed to stumble my way into, if we get in under favorable circumstances, all right, you are going to not lose as much on your bad trade, on your losing trades, and you're going to do better on your winners, versus kind of this, well, I'm just going to throw it on regardless of what volatility is doing. So
in effect, Mark, it's an edge. You're looking for a little bit of an edge, so that even if you're wrong slightly, you might not lose money.
Yeah, or as much money, exactly. And believe it or not, that's a big difference.
Thank you for participating in this week's session. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.